So hello everybody, we are starting the event, so you can start sitting down, and hello everybody also watching us on screens. Welcome to the Nordic-Baltic Private Equity Venture Capital Momentum event, and my name is Kadri. I am the Managing Director of the Estonian Private Equity and Venture Capital Association. And we are actually doing this event for the second time already, but this time a little bit differently.
Hi, I am Margus Uudam, partner at Karma Ventures and also chairman of Estonian Private Equity and Venture Capital Association. Like Kadri said last time, we were maybe 5 times bigger room than this, and it was completely empty. Only cameras, technical staff, and project manager. It was time of COVID. But we were on a mission to bring the topic of Baltic and Nordic cooperation to the stage. And we had close to 500 people watching over the video stream. This time, so happy to have you here, but also many people online. I'm honored to be next to Kadri and Mattias, who have been really cornerstones in brainstorming and action of the Nordic and Baltic cooperation. Mattias, over to you.
Thank you, Markus. Thank you, Kadri. Always pleasure to be in Tallinn and pleasure to be here today. I'm Mattias Kail. I'm heading the Fund of Fund Investments at TESI, which is the state PE and VC arm of Finland. And really thrilled about today, since I think it's very important for countries like the Nordic countries and Baltic countries really to pull together. We have all our unique expertise, and by joining forces, I think we can be even stronger in the global competition. And what is really important, but not just joining the forces, but also showcasing that for the investors in the region and outside the region as well. And I'm here today as one of the state investors, and also later joined by some of the others as well. We can do only the part of the job, but we need all you here in the room, so all the public players, all the private players, to make the market even better.
So the essence of today's discussion is really about the cooperation. Nordic countries have long time developed the market systematically. Baltics are a bit new players, starting more actively 2008 and 2015-16 with Baltic Innovation Fund. And we both have enjoyed quite a lot of success. Last time, 2001, the valuations were high, investment activity was great. The markets have changed. And now the question is even more. Should we work more together? Should we have more synergies? And maybe also, do we have ambition for it to build maybe the strongest ecosystem in the world?
So today we're taking a deeper dive into the activity in the region, and especially the LP activity, which is a hot topic today. What we're seeing in the market is a very difficult market. And we're discussing the role of the state LPs. We're discussing and hearing some of the views from the GPs that have been recently raising their funds as well in this environment. A bit more in the dynamics as well. Who are the groups of the investors that we're seeing moving in the market and doing things, and also how much do we see the cross-border activity inside the region and coming outside of the regions, and also discussing potentially a bit on what are the things that we see enabling the investment activity and also potentially blocking the investment activity, and where we can have a nice segue on what can we do on getting over those. So a lot of things to come. I listed some of the things here, and much more will be also heard and seen today.
Yes, so it sounds exciting, and let's see if turbulence creates innovation, as it's often said. So we are now ready to sort of launch the event. Just wanted to remind that please post your questions to the speakers and panelists on Slido. It should come to the screen as well. So slido.com and #momentum23 is the code. And I would really also like to thank our organization's partners. It wouldn't have, happened without you. So all the Nordic and Baltic venture capital associations, as well as DESI, SmartCap, Karma, and Latvian Ministry of Economics was here to assist us. And without further ado, I will thank the moderators, co-moderators, and we will ask our first speakers, KPMG Baltics, to come on stage.
Thank you, Kadri, and the moderators. It is a pleasure for us to be here today at the 2023 Momentum Conference. My name is Dimitri. With me is my colleague Sam, and we are part of the KPMG deals team. And as first speakers, we were asked to just provide a little bit of context and introduce the region, as well as provide some kind of key data overview on the PEVC Nordic-Baltic cluster. But as a starting point, as an introduction to the region, we'll maybe talk a little bit about the macro overview. And to start on a lighter note, at the moment, we reached the stage of the year where sunshine hours are less and less. The temperature is getting colder. But what does that mean? Is that always bad, actually? Well, is less sunshine a bad thing? Well, overarchingly for the region, we have, on average, compared to the EU, far less sunshine hours, and that's not a surprise. But maybe does it correlate on us being more innovative, having more time to spend indoors, code, research, analyze? Well, maybe that's the case. According to the Global Innovation Score, our region scores the highest of any other regions in the EU. Sweden, Finland, Denmark, they are all in the top 10, with Sweden nearly finishing first, just second behind the United States. With regards to the highest risers of the year, that's Lithuania and Latvia, both of them stepped up by 5 places compared to last year. So the region is doing really, really well, and the score is based on a wide variety of parameters like business environment, technological and creative output, digital infrastructure, and human capital. So actually, having less sunshine might not be always such a bad thing. But let's move on maybe to introducing the region a bit more. Starting off from the population. So in the EU, we have around 450 million people. That has grown, but grown at a rate of around 0.1% per annum. The region, so the Nordic Baltics, together, they have around 34 million people, which makes just over 7% of the EU population. If you look at the cluster itself, the Nordics have actually outperformed the EU. Their population growth has been around 0.5% in the last 5 years. For the Baltic, the picture has been a little bit mixed. Estonia and Lithuania managed to increase their population slightly. For Latvia, the population reduced. Overarchingly, the population growth in the countries is driven mostly by migration and not a change in the birth rate. And unfortunately, maybe in recent years, due to the geopolitical situation, there has been an influx from parts of the CEE region into the Baltics and also into the Nordics. With regards to GDP, well, the EU GDP is just eclipsed 14 trillion. With regards to the Baltics and Nordics, together they are making up close to a true 2 trillion economy, which actually makes up close to 12% of the EU total. So actually, GDP-wise, we outperform compared to population. With regards to growth, in the Nordics, the average growth rate outperformed the EU. It was around 1.8% compared to an EU average of 1.5%, whereas the Baltics strongly outperformed. So actually, the Baltics economies grew in the last 5 years on an average of 2.8% per annum, compared to 1.5% in the EU then. But actually, the picture might not be as rosy as it shows here in 2023. According to the EU Commission, in Sweden and all of the Baltic countries, we are looking to see contraction in GDP for this year. And it's only Denmark, Finland, Iceland, and Norway that have some growth for the year. Fortunately for us, economists mostly agree that in 2024 the tide will change. But I think the question here is whether we'll see that tide change already at the start of the year, or rather in the latter part, the second half of the year. We've talked about population, GDP. Naturally, let's talk about GDP per capita, where here we see that the Nordics are doing exceptionally well. They're comfortably above the EU average and above the Baltic countries. However, it's important to note that for the Baltic countries, they have seen very strong growth, especially in the last decade, and they are closely catching up the EU average. So on average, the Baltic countries have increased their GDP per capita by 2 to 2.5% in the last 5 years, while for the Nordics, the growth has been just around 1%. Often it's also in academia discussed whether increasing expenditure into research and development actually translates into a higher GDP. Well, no direct correlation has been proven, but if we look at the graph on the right, we see that most of the Nordic countries that are high on the GDP per capita also do exceptionally high investments into R&D, considerably above the EU average. Norway is an outlier here, potentially because of the fact that it has been blessed with an abundance of natural resources that maybe its neighbors do not have. With regards to the Baltics, the picture is better compared to prior years, but we can see that both on the public and the private sector side, more can be done. But enough of the context, let's talk about the PVC figures. So I'll hand over to Sam.
Yeah, thanks. So let's jump into the details. Let's talk about fundraising. First off, you can take a look at the wider total funding amounts for both private equity and venture capital funds across Europe, the Baltics, and the Nordics. And we can generally see that over the past 5 years, we've seen a very strong uptick in fundraising, kind of around 11, 12% compound average growth rate for Europe and the Nordics at large. The Baltics have remained more volatile in terms of fundraising, but the picture changed in the first half of 23. We've seen that funding has really decreased substantially and is actually the lowest year on record for the past 5 to 6 years. In addition to this, we can see that the Nordics have really punched above their weight in terms of fundraising for Europe, while making up less than 5%, less than 7% of the population of Europe. They've fundraised between 10 and 20% of total European fundraising. The Baltics were much smaller, but raised between 0 and 1% of European average total fundraising. Moving on to a little more detail, we can talk about private equity and venture capital fundraising separately. And we've seen that this decrease in the first half of 23 was strongly driven by private equity fundraising. Especially in the Nordics, where we see it jump from 33 at 22% of total European private equity fundraising down to about 9% in the first half of 23. Similar drop in relative terms for Nordic venture capital, but in absolute terms, the change is strongly driven by private equity. The Baltics, still very volatile, very small figures compared to the Nordics, but we've seen substantial development, especially if you look at the picture in much larger time scale. Moving on, so let's talk about where these funds are actually coming from. And we see a very different picture between Nordics and Baltics. We see that the Baltics are strongly depending on our state public funding sources for private equity and venture capital, while the Nordics, a more developed and mature private equity and venture capital market, are deriving a lot of their funds from private investors, so corporates, sovereign wealth funds, pensions, and other more diversified sources. We can kind of expect the Baltics to show a more similar picture to the Nordics looking forward. As the market matures and develops, we can expect the sources to diversify and see a little bit more similar picture to the Nordics in terms of sources of funds. Moving on to new funds. Here's actually a very interesting picture because we can see that the Baltics have actually raised fairly similar amount to the Nordics in terms of new fund creation in the last year. We see that the Nordics raised around 20 new funds and the Baltics 14. And what we see is actually the Nordics is mostly driven by venture capital, mostly coming out of Stockholm. And I think only 1 out of 20 new funds was actually a new fund. The rest were follow-on funds from existing fund managers. And a similar dynamic in the Baltics, a lot of follow-on funds. But the more interesting dynamic is that we see the new funds being created having a more pan-European coverage focus in terms of their investment strategies, which is a very interesting addition to activity here in the Baltics. Now I hand back over to Dimitri to talk to us about where this money is going.
Great, thank you. So, investments. Well, with regards to investments, similar to fundraising, we follow quite a similar trend for 2023. We are facing an environment where we have macroeconomic uncertainty. We have had, at least in the first half, an increasing cost of capital. That actually meant that fund managers have become a little bit more conservative. They took an inward view and maybe focused their attention in 2023 on their portfolio companies and making sure that they can weather the storm, and looking to see whether they can see some brighter sunlight in the macroeconomic situation coming about in H2 and the start of 2024. With regards to the results, in Europe, or investment in the start of 2023 was around 32 billion, which is a fall of 50% compared to H1 2022. And actually, that level of investment was last seen in the first half of 2016. For the Nordics, quite a similar picture. Total investments for the first half of 2023 were 3 billion. That was a 51% decrease compared to last year. And again, those kinds of levels were last seen around 2016-2017. Baltics follows quite a similar trend to the Nordics and the Baltics. With regards to the future years, I think there is a more positive view on what awaits us. Interest rate hikes seem to have stopped. The macroeconomic situation, some might say, is reaching a new normal at least. And there has been a recalibration of valuations as well as quite a high percentage of dry powder in fund managers' portfolios, which we'll talk about a little bit later. So we do expect activity to pick up at the start of next year. Another interesting point to note here as well is that what we've seen in the EU, and that has translated into the Nordics and the Baltics, is the increasing role that growth and venture capital investments play in the entire ecosystem. So we talked about total amounts of investments, so let's see where actually the investments flow. Well, overarchingly, for companies located in the regions and for the ecosystem itself, it's kind of internal funding within their regions. So we can see that Baltic and Nordic fund managers invest the most into the markets they understand, of course, their local domestic markets. That's more the case for the Nordics, but also that for the Baltics. What important is that actually our regions are able to attract quite a bit of foreign capital. We can see that especially on the Nordics, they attract a lot of capital from Western Europe, the UK, Germany, France. For Estonia as well, the UK is an important trade partner, as well as Switzerland and, of course, the Nordics themselves. And it's also good that actually the companies in our cluster can actually raise funds from outside Europe, which plays quite a significant proportion of total funding invested. Another important fact is that there's a lot more investment by local fund managers outside of the local markets. For the Nordics, that has been a picture for a longer time now, but we see that especially with Baltic fund managers. As fund managers are raising their second, third funds and they have reached credibility, they are actually expanding their geographic borders where they are able to invest. And another fact I'd like to note is that according to the recent S&P Global analysis, just for 2023, actually the Baltic region has the highest percentage PE/VC capital penetration in private companies. So that means that for the Baltics, on average, around 2% of the total number of private companies have some kind of PE and VC investment, while as for the Nordics, the percentage is below 1%. So we've talked about the total investments, the flows of capital. So what are the sectors? Well, thanks to Invest Europe's 4th annual private equity survey, they have actually surveyed over 300 fund managers all around the region to see, what are the sectors that they are going to focus on going forward. Unsurprisingly, energy and renewables is on top of their agenda. Life sciences and healthcare, of course, given the situation that we've been in the recent years. And that has been a lot in the media, of course, information communication sector and wider deep tech. We see quite similar sectors for the Nordics and Baltics. What's maybe different is traditionally Nordics has been very strong in kind of business and financial services, especially on the PE side. While for the Baltics, traditionally a lot of capital has gone into the ICT space, but more recently we've seen quite a lot of investment in kind of the consumer goods and services segment. On the other side of the coin, however, what investors noted that sectors such as real estate, construction, and quite a few noted automotive are those that might kind of struggle to raise fund manager capital or to get attention from fund managers, just given the macroeconomic situation they are in. Talking about investments, the year has been hard, but there's still some amazing deals going on in both the Baltics and the Nordics. We won't go through all of them, and this is just a snapshot. But just to bring out a few, an interesting deal was completed by BaltCap, the first deal by a Baltic fund manager to actually take private a London Stock Exchange listed company, Expediator. We've had Axel complete the 700 million buyout of Danish IT company ITM8 for 700 million. And of course, we had a platitude of VC fundraising, both in the Baltics, for example, Walk Bikes in Estonia, Tabbox in Latvia, Heavy Finance in Lithuania, but as well as juggernauts in the Nordic space, Norse Power, the Finnish marine tech company, Lunar, a neobank in Denmark, as well as Strise, a Norwegian KYC intelligence company. Also, looking at the activity of who are actually the main investors and the most active investors in the region. If we look at the Baltics, for the PE side, it's of course some of the largest PE funds are the most active, BaltCap, Involda, followed by Livonia and United Partners. The VC space, of course, the investment sizes are smaller. They focus on earlier ventures. There's quite a number of more investments. You can see Startup Wise Guys leading the pack, but there's also Specialist VC, First Pick, and a number of other VC funds that are actively investing. On the PE side, for the Nordics, interestingly, you can see that in the last 2 years, the top funds have done close to or over 50 investments, which is impressive. Some of the funds to note, Norvestor, FSN, Verdane. Triton is not a Nordic fund, it's a UK-based fund, but Nordics is a region of increased interest for them. And for venture capital as well, you can see the main funds that invest in the Nordics are very, very active. And finally, before I hand over to Sam to talk a little bit about the exit activity, I think one important message we need to have in mind is that there is a lot of dry powder out there. If we start from looking at Europe, we have around 1 trillion of capital under management by fund managers. Of that, 35% is actually dry powder. And actually, this number is driven down by the inclusion of the UK into the EU total. As for the UK, the dry powder levels are much, much lower than for the region as a whole. You can see that from the Nordics and Baltics, nearly 50% of funds are actually in dry powder. So therefore, they have taken a little bit of a more conservative view, raising funds quite recently, and actually having the war chest there that as soon as the situation improves, they are ready to tap into the market. But here I'll hand on to Sam.
Yeah, so let's move into exits. Let's kick off with private equity exits in Nordics and Baltics. Macro trend we've seen is a lot of growth in 2021, driven by the valuations that were mentioned earlier, and then a slight decrease for both regions in 2022. And we kind of see this as driven by this kind of a lot of exits happening in 2021, leading into a little less optimism in 22. We've seen that in the Nordics, values for exits and has been pretty resilient, regardless of years. And the PE exits are really driven by M&A, mostly sales to other private equity, so secondaries. In the Baltics, it's a slightly different picture. Most of the exits are driven by trade buyers and management buyouts. We've seen these really dominate the region, and a lot of these are being done in real estate, manufacturing, consumer goods, and a little bit of energy. And moving on, we can talk a little bit about the venture capital exits. We see a very different picture between the Nordics and Baltics here. We see 2018 for the Nordics being a record, an exceptional year, driven by a couple very large exits. And then in the Baltics, we see very strong growth. Of course, the numbers are very different in terms of the little letter after the number. But what we see is that venture capital exits have really increased in the Baltics, and we kind of foresee these continuing to grow because we see the market is having a lot of overdue and say portfolios that are due for exit very soon. So we kind of foresee this curve continuing to move upwards. And maybe a couple extra points is that the Nordics have seen IPOs really decrease in 2022. It's most of the gap between 21 and 22 is driven by this dynamic, and most exits for venture capital in the Baltics are the same trade buyers, and mostly also exits from early fund strategies. Moving on, we can talk a little more in detail about the exit routes for private equity and venture capital across the regions and across the countries. We see the typology being very different between both regions. While the Baltics are really driven by sales to trade buyers, the Nordics are mostly driven by sales to private equity, as noted previously. And maybe like an area of worry currently is this write-offs for private equity and venture capital firms. And we've seen in general that across most countries, write-offs have either remained very stable across the years or decreased even. The only exception being Lithuania, which saw very high levels of write-offs in the last year. You can see here 48% of exits for Lithuania were write-offs in the previous year, which is pretty, Basically, because in Lithuania in this year, we've seen that the share of write-offs in total exit has really decreased down to 1%, so it might have been a temporary element. Moving on, we can talk a little bit about a few, say, notable exits or top exits by value or a cost for the Nordics and Baltics. Here in the Nordics, we've seen healthcare and life sciences really top the charts in terms of exits, with interesting deals by Diaverum divestment of Diaverum and Elab, which was divested by Novo Nordisk's investment vehicle. In the Baltics, Baltcap. Topping the charts, and a couple from their private equity fund, the Private Equity 2, I believe, and then one from their infrastructure fund. Moving on, let's talk about venture capital. We've seen a couple very interesting deals in the Nordics. Keretsis, an Icelandic company, was divested by several Nordic investors, some family offices from Denmark, some local venture capital firms, and even one of the investors was actually the US Department of Defense. Very interesting. And Wolt, which topped the Finnish exit charts, largest exit in Finland since 2018 when Tencent bought Supercell. And in the Baltics, we have some, several interesting divestments. Most interesting for me personally is this Nordic exit, which was sold to a UK-based banking unicorn out of Lithuania, or Latvia, sorry. Yes, moving on.
That's it, actually.
Yes, that's it.
Thank you very much.
Thank you.
Thank you so much for the thorough overview. People have already asked me privately whether you will be sharing your slides, and I guess you will, hopefully will. But now it's time to move on. European Investment Fund has worked across Europe with many governments and has a lot of experience with making regions act together. EIF is here to share their experience and see what we can learn from that. So I'm really happy that today we have Chris Pulis here on site. So please join me to the stage. And a colleague of yours from Finland, or a Finnish colleague, Juha, is hopefully going to join us through one of the screens. The tech team is working on it, so welcome, and the floor is yours.
Yeah. All right. Thanks, Kadri. Oh, good afternoon, everyone. My pleasure to be back again here in Baltics, sharing some sort of insights with you. As Kadri said, today I'm joined with my colleague Juho from dialing in from Helsinki. So both of us, we work for European Investment Fund. Currently, both of us at the investment team, but Juho can tell his own story. And today we will share with you a bit of, let's say, perspective of what EIF has done in the Baltics, as well as some sort of return insights, what one as an LP can expect by investing both at the European level as well as at the regional level, let's say Nordics and Baltics. And I guess the reason we do so is that today our session is, or our section is called facilitating, I guess, the LP cross-border investments. So we believe that by sharing a bit of transparency on the data and on what we have done, you can, those who are interested to invest as LPs in the region, they can get a bit of better sense how it looks like, what you can expect. And then I trust that with Margus, we're having also a small chat afterwards to discuss what can be done better, or let's say to facilitate the cooperation. Maybe without much further ado, so Juho will introduce you a bit the EIF overall and EIF's activity in the Nordics, and then I'll follow up with the same on the Baltics and then share some return statistics with you. Juho, over to you.
Yes, thanks for the good introduction, Chris. And I'm, as Chris mentioned, his colleague in the venture capital fund investments team at the EIF, and my responsibility is mostly to cover the Nordic VC market. Just briefly on EIF before we jump into our Nordic strategy and activities. So EIF was set up in 1994 to help European small businesses and achieve better funding access for growth-oriented European companies. On one hand, through LP investments in funds in private equity and VC space, and through guarantees to banks and other financial institutions on the other. And of course, our mission, partially in connection with LP investments, is to build also an infrastructure in European private equity and venture capital that is sustainable and growing and can attract more private investment. In terms of shareholder base, our main two shareholders are the European Investment Bank, owning roughly 60% of our share capital, and the European Commission holding roughly 30% of our equity. And these two are also the largest providers of funding for our fund investments. And as said, EIF was set up in 1994. We started doing fund investments in 1998. And over the 25 years in this business, we've made commitments for over 35 billion euros in a portfolio of over 1,400 funds. Then moving on to the Nordic strategy, and Chris actually called me on Monday to see if I could put together all the data we have on our Nordic activities and strategy, and ideally put that all on one slide. So I wonder if the end result is then some kind of weird tribute to Nordic efficiency or just a very crowded slide, which probably needs a bit of explaining to open up. But I'll give it a go. So if we look at the past decade and our investments in Nordic funds, we've deployed just a bit over 3.1 billion euros across 107 equity operations across the Nordics. And this 107 is split between 92 fund investments, and then we've done 15 investments in so-called co-investment microfunds alongside business angels from Denmark and Finland under our European Angels Fund compartments that we operate in these countries. And as you can see from the chart on the left, the investment volumes we've deployed in the Nordics have been relatively volatile. So they bottomed out in 2014 when we only did one fund investment, and this was in Finland for 20 million. Whereas in 2022, we deployed 648 million across 16 funds. But overall, you can see that the trend is definitely increasing. And in terms of geographical splits, roughly half of the 3.1 billion has been deployed in teams investing out of Sweden. But then if you look at the number of transactions, it's a bit more balanced, meaning that some of the larger funds and larger tickets we have deployed have been with Sweden-based teams. On the left-hand side, you also see the leverage multiple, so how much of additional investment we have catalyzed alongside our investment in the same funds. And clearly there as well, the trend has been going up. And in the last peak of the market cycle, obviously, there has been a lot more private investment flowing into VC and private equity in the Nordics. Also, we have participated in some fundraisings that have been notably successful. So our relative weight in the Nordic market has reduced over the last 5 years compared to where it's been probably in the 5 years before that. In terms of our strategy in the Nordics, probably unlike in the Baltics, there was already a statement on the relative maturity and longer-standing history that the industry has in the Nordics. Probably deal flow we on average see coming out of the Nordics is a bit, if I should say, curated as a sort of a market builder in the Nordics compared to what we probably do on average in the Baltics. And of course, that has to do with the relative maturity of the fund, but also with the fact that actually all the Nordic countries have a relatively sizable and active and professional local what we call NPI, so National Promotional Institutions. So we regularly co-invest with DESI in Finland, some invest in Sweden, and IFO in Denmark. Obviously, doing co-investments and being a close partner to all these parties doesn't mean that we wouldn't have our own strategy and view on what the development needs and market gaps in the Nordics are, because there still are plenty. For instance, we still see a shortfall in terms of pan-Nordic growth funds. There are too few Nordic funds with proper fund size to lead A and B rounds in fast-growing Nordic companies. We see that there is still need to institutionalize the early stage market in Denmark and Sweden. There is relatively good availability of capital, but it's still a bit fragmented. In Finland, on the other hand, we see that the efforts from DESI and Business Finland VC have led to good coverage of thematically focused early stage funds, but the issue is a bit the small fund size that many of these players have only managed to raise. So what is then the EIF value add that we can bring to these teams? So we try to obviously pick the best out of these different buckets and help them to really take the next step up in terms of scaling. And of course, we do that with the sheer volume of the tickets we write. But also, and what we find more critical for the future sustainability of the industry is that we feel that we can add value in helping the teams adopt a mindset that makes them a bit more international and institute connect with LPs and cultures beyond their national borders, because VC investing is very much a cross-border business, but obviously many of these players start as a domestic operation. And of course, over the years, we've seen many great success stories also going up from our portfolio. We've backed and still continue to support teams that are thematically oriented and out of their strong home base in the Nordics have managed to build a pan-European footprint. Also, we've repeatedly been successful in supporting strong stage-focused teams that have started in one Nordic country and then gradually build their exposure and footprint regionally. Yeah, and with this overview of the Nordic activity, I'll hand over to Chris to go through the Baltics.
I guess in the interest of time and probably going more to the real stuff sooner than later, meaning the performance data, I'll just do a very quick recap on activity in the Baltics. Those of you from this region probably know it already. EIF has been involved, as Juho said, for 25 years, but most notably, I think the one initiative I have to sort of pick out is Baltic Innovation Fund that the EIF has done together with the 3 Baltic governments. And I think the role of that cannot be overstated, because without the Baltic Innovation Fund, which, as you can see from the slide here, has created around 300 million in fund-of-fund commitments that were allocated or will be allocated in total to 15 funds of private equity and venture capital in the Baltics. Without that volume, I think it's fair to say that the ecosystem here would look much different. And again, I have to come back to what Juho said, the catalytic effect or multiplier effect of EIF, because the fund of funds across the 2 Baltic Innovation Funds, 1 and 2, is 300 million. But the funds in which we will invest or have invested with this amount of funding, they will have kind of triggered 4 times more additional funding to these GPs. And overall, the volume BIF 1 and 2 together, plus the catalyzed funding, I think will amount to around 1.5 billion. And if I remember statistics right, then over the last 12 or so years in the Baltics in total, there have been 2.2 billion raised by the GPs. So you can count yourself, it's around three quarters of the total amount raised has been catalyzed in one way or the other way by direct or more or less direct involvement of Baltic Innovation Funds. So yeah, not much more on this one. However, all the deployment numbers and kind of activity and policies are nice, but I mean, at the end of the day, returns is what is interesting for the LPs, especially the private LPs. So I think if one speaks of building a sustainable venture capital or private equity ecosystem, you need to be able to convince also the LPs that the returns are there. And for that, let me walk you through in maybe 2 or 3 kind of sections. So one is I'll start with European level returns. And those who attended the Baltic VCA event in August might have seen these data. So I apologize a bit of repetition, but still it might be interesting for you because the data are updated with mid this year. So these are the most actual data that are available on the market. And then I'll transition more into the sort of regional performance perspective. Before diving into maybe a small recap of how to read this. So this is basically performance data by vintage year of all European venture capital funds that submit their data for benchmarking. These are both EIF and non-EIF funds. As said, they are strategized by vintage years. So if, for example, if you pick out the year 2011, so these are all 2019 vintage funds that submitted their data. And you can see the net IRR performance as of mid this year for this fund population. And the way how to read sort of the candle bar or the 3 dots, then if you take the middle dot, which for 2019 fluctuates around, 10% net IRR, this means that 50% of all the fund population are above the 10% net IRR performance and 50% of the population is below that. And then the top point is the cutoff point for the top quartile performing funds. It's the lowest performance level of the top 25% of the funds in that year's vintage. So in year 2019, for example, there is 1/4 of all the European venture funds who have delivered at least 17-18% IRR or higher. And in the sort of the flip way to read the bottom dot is that there are 1/4 of all European venture funds that have delivered at most 2 to 3% IRR and then or lower. And this goes for all the vintage years. I've put the title on this slide, European Venture Capital Performance, a Story of an Ugly Duck. Those who are in EIF's portfolio might kind of recognize the name. So that's the name that EIF has selected for its annual GP networking event. And there's a reason why this name has been chosen, because we believe that European venture capital is a bit of a story of ugly duck turning into quite beautiful swan. And this story can be kind of quite well seen from the data here. And to tell the story, I've put, let's say, the performance data, strategized them maybe in 3 time spans. So starting from left to right, from 1998 to let's say, early 2000s, or dot-com bubble crisis, more or less. You can see that if you look at the best performing funds, they were delivering, let's say, barely a single-digit positive IRRs. So only the top 25% for performing funds were able to deliver you, let's say, consistently a positive, although very small positive return. You can say that the ugly duck of European venture capital was born at the time. Fast forward, let's say, 5 or 6 years so, between the 2 crises of dot-com and the pre-Lehman crisis, you can say that, let's say, the duckling has started to show first nice feathers. In terms of IRR, the top performing 25% funds, they stepped up their performance by roughly 5 or so IRR percent points. Between 5 and 10, 5 and 12% IRR consistently over that time period. Fast forward to the last 10, 12 years, this is probably a nicer part of the story. You can see that the best performing funds consistently have delivered at north of 10%, in some cases even 25% net IRR based on the vintage. Another way to look at this is sort of from the most negative scenario. So if you would be an investor and invested in European venture capital between 2009 and 2019, so what is the chance that you would have lost money, or let's say as it stands today, you would be out of the money as an investor? And you can see that, say, for one vintage year, 2013, 3/4 of the European venture capital funds in that decade have made money. So they are in a positive territory, obviously. The returns are kind of quite amplified between the top and the bottom quartiles, or cut-off quartiles. But all in all, let's say 75% of the European venture capital has been in the money in that period. Quick one on this one. The previous slide doesn't tell you a story if you invest in a first-time teams or teams that are raising their second or third fund versus the fund investing in teams that are kind of already established managers. In our lingo, we call blue chip funds those that raise the fund generation number 4, 5 or later. We call emerging managers those who raise funds number 2 or number 3, and then first-time teams are first-time teams, obviously. And the way to look at this slide, so again, this is by vintage years, 2004 to 2020. If you would take top 5 performing funds, and these are EIF investments only because we do not have these data for the non-European funds. If we take top 5 performing funds, by looking at the colors, so blue chips being in blue and then first time and emerging ones being in shades of green, you can eyeball, let's say, what is the composition of top 5 ranking by vintage year between the 3 type of managers. And let's say high-level conclusion, I think, and this is an important conclusion, especially for investments in the Baltics that do not have so many funds of generation number 4 or 5 or later, is that there is no consequential evidence to say that if you would pick out either the established managers or managers yet to be established or establishing themselves, that you would consistently outperform or disperform based on your picks. And over time, you can see that maybe from the 2008-12 and then onwards 13 to 2020, maybe a blue again starts to dominate a bit the picture. But this is in fact the reason that the managers that were first-time or second-time managers in the earlier years, they turn to establish themselves and become sort of closer to the blue chips, or in some cases they convert to the blue chips. Then zooming into the Nordics and Baltics, so here again, unfortunately, no data in the regional cutoff is available for non-European, non-EIF funds. And hence I had to resort to sort of picking out the statistics from EIF in a similar fashion as on the candle bar slides. So the lines represent the cutoffs on the left-hand side for the top quartile performance, and on the right-hand side, the lines represent the middle sort of population cutoff marks. EI, if you look at the left-hand side lines, then yellow being Baltics, pink being Nordics, and blue being all EIF population across Europe. then above that line lays 25% of the fund population, and below that line lays 75% of the fund population. And then on the right-hand side graph, where we have the median cutoff lines, then 50% of the population is above the lines and 50% of the population is below the lines. And I think two messages for Baltic versus, let's say, Nordic performance here. If you want to go for more outsized returns, you probably need to go for investments in Nordics. And I guess to some, it kind of makes sense, because in Nordics we have more established and mature ecosystems, not only in terms of fund managers, but also their investment targets. So if you want to kind of go in the funds that can deliver you about 20% IRRs or so, you should be picking also Nordics, let's say, with a higher, to increase your chances of that outlier success. I think on the venture capital side, in our portfolio, we have managers like Creandum, Norzone, and the likes, who have been investors, for example, in Spotify. So to get outsized returns at the fund level, you need to be investor in those funds, for example. Then again, Baltics, they also have their role in the portfolio. Baltics is more consistent, and if you look on the right-hand side graph, the yellow line Baltics on the top of the two other lines, it shows more solid and consistent return along the middle line. So I could rephrase it in a way that by investing in the Baltic funds, you have 1 in a 2 chance, just by randomly picking them, at least based on EF's population, you have 1 in 2 chance ending up at net IRR level of 10% or above. If you're smart and do your due diligence properly, you probably increase your chances even more that you end up in a double-digit IRR performance by investing in the Baltics. Nordics is not that far away there, but the middle sort of population line is a bit below the Baltics ones. So if I think of it from an LP perspective, I probably want to do both. I want to go for Nordics to maximize my outliers. If I want to, let's say, also keep my middle line solid, I'll also put the Baltics in my exposure. I have the same for TVPI, but in the interest of time, I'll skip those. And then maybe another piece of information to substantiate what I just said on the previous slide. If we look at the Baltic Innovation Fund, so it's the fund-of-fund mandate established in the year 2013. And if you aggregate the 7 fund investments we've done out of Baltic Innovation Funds in a single sort of synthesized index, as if it would be a venture capital and private equity investment in a single fund of 2013 vintage, and compare it to the respective vintage year performance of all European funds, both EIF and non-EIF, then you get the 2 lines. So the pink line being Baltic Innovation Fund performance, and the dark blue line being the benchmark performance. And benchmark, in this case, I've chosen middle line, sort of the quartile 2 performance, which is then the 50% of European population is above that line and 50% of population is below that line. And 2 points of observation. So one is Baltic Innovation Fund, as of end of 2018 and onwards, has consistently been around 10% net IRR performance. And if you benchmark it against where does it stand versus European performance, it's above the average European performance. So again, the good news, with the Baltics, you can get the returns that will outperform the European sort of average population. Lastly, maybe a sort of a transition slide also to our discussion with Margus. On left-hand side, you can see the estimated return distributions compared in 2 ways. The pink lines show what type of return, which is on the horizontal axis, net IRR, you can get if you invest in individual funds, if you do individual picks. And the dark blue bars show what type of return you can expect if you invest in a diversified portfolio of 10+ venture capital funds. And then the vertical axis shows you sort of the frequency or probability of those distributions. And this is data which is not the actual performance data. I should make that sort of disclaimer, but this is a Monte Carlo simulation of 1,000 runs done by our risk team based on the historic performance of EF's portfolio. And the message being here that if you are an LP investor and you want to go for, let's say, solid returns, perhaps not outsized ones, but by solid meaning 10 to 15, 10 to 17% IRR, you should pick up the fund-of-fund investments. If you're the one that's kind of with a more risk appetite and want to go for higher outlier returns, either on the positive side or also being able to accept the fact that there's a good chance you end up with close to nothing or perhaps even losing something, then yeah, you do the individual picks. And I think this is an important point to make, and is also represented by Baltic Innovation Fund, as well as if we are speaking of potentially making some sort of a mandate that would cover not only Baltics but Nordics, which might be interesting in my experience for Baltic pension funds, for example. So then this is the way to consider that. If you want to get a diversified exposure, you go for diversified fund-of-fund portfolio. Thank you. That's sort of all from my side. I know, Juho, you want to add anything on this one? Or we transition to the chat with Margus?
Let's move to the questions.
Thank you. Just few questions based on your slides and what we discussed earlier as well. Maybe starting off with a bit naive question. You have seen the European venture space developing for many years. Are you overall happy with the LP activity, how the LP base has built up, the type of LPs, what you see in the market? Some of the results from Baltic Innovation Funds were impressive, like how much private money you were able to activate. But if you look at the overall picture, we have had good times, now more challenging. So do you think the LP development has been in a solid place?
I think the answer will depend based on the region that you look at. There is no one single answer, and it strongly correlates with kind of the development of the local economies per se. And again, sort of Western Europe or Germany, for example, having a lot of both institutional as well as, let's say, the Mittelstand, sort of private families and family offices that have accumulated wealth. It's a one story. If you look at the Baltics, for example, it's a completely different story, as already sort of told by KPMG, whereby I think it was Latvia that was kind of very heavily reliant on the government agencies. Plus, I was a bit surprised on the large share of the pension funds, but that probably is just the fact that the overall amounts of raised by Latvian funds is very small, hence the pension fund sort of amounts percentage-wise appear to be big. But for example, one element that I find still missing on the venture capital side is the involvement of pension funds. I think it's being ramped up now, and pension funds, especially last year, if I remember statistics right, of all the pension fund investments done in the last year, 3/4 was done in a venture capital as opposed to private equity funds. But then again, over the years, private equity has kind of completely dominated sort of portfolio of pension funds in the Baltics, for example, and venture capital has only stepped up in the last maybe 1 or 2 years. So this is something that clearly would be a good thing to develop.
Mm-hmm. Juho, do you to add?
Yeah, I guess we also should distinguish there, at least from the Nordic perspective, between private equity and venture capital. So in VC, we still see that fundraising is still very much a domestic exercise. We have a few outliers in the Nordics that are able to raise internationally, but most, particularly smaller funds, raise almost exclusively from domestic investor base. So I think that what we need to also change is the mindset of GPs. So I mentioned that we feel that that's part of our mission as well, to encourage and support teams in building cross-border connections and adopt that international mindset, and also realize that building relationship with prospective LPs is a long-term game. So LP likes to only be contacted whenever the GP needs money next time. We need to adopt a longer-term horizon and keep up the relationships, potentially even for years before we come to an investment decision. And also, I'd like to say that in the Nordics, of course, the role of public money is relatively important still in VC. And of course, I already alluded to the national promotional institutions that are active cornerstone investors in all the Nordic countries. And of course, they represent the interest of sovereign nations. And of course, there are a lot of political drivers, understandably, behind their allocation decisions. And of course, we have some challenges that must be on our best addressed at regional level, be it then pan-Nordic or Nordic-Baltic level. We've seen some movement in the right direction. These NPIs co-investing together in funds, but there's still probably some ground to cover before we can be all fully satisfied with that.
You have quite good experience on making governments and countries work together. I think the Baltic Innovation Fund has been one very good example. You have had more. And this is one of the trickiest things to pull off, because it is political. Every country is asking, what's in it for me? and trying to set certain restrictions, limitations, and so on. Maybe you could share a bit on like multi-country initiatives, and if you would imagine something for Nordic and Baltics, what it could look like.
Yeah, no, happy to sure, and Juho, chip in from your side, especially on the kind of Nordics. I think the two come to my mind what EF has kind of done in recent years. So one is Central Eastern European Fund of Funds, which I think comprises 5 or 6 governments from it's Hungary, Czech Republic, Austria, Slovakia, and a few other ones from the region, whereby the governments have recognized that there is sufficient early stage funding, but what is lacking, as already mentioned by Juho, and I think is the same also actually for Baltics now that the ecosystem has matured, is the growth funding, or let's say as of Series A, B in the venture side. And there was an initiative of, I think, close to 200 million set up by the 6 governments to facilitate basically growth fund establishment in the same way that the Baltic Innovation Fund has done for overall ecosystem here. And the other one, very big sort of flagship initiative of EF as of maybe 12 months or so ago, is so-called European Tech Champions Initiative, which is a fund-of-fund mandate of between 3 and 5 billion, if I'm not sort of mistaken, but basically 2 cornerstone investors there is the French and German governments, each putting 1 billion to facilitate establishment of pan-European growth funds, able to commit checks between 50 and 100 million to European companies to ensure that once the companies reach a certain size and maturity stage and say raise the rounds of C and D, they're not basically taken over by American investors, which then instead American boards bring the kind of the company center of gravity to US and this talent, and then subsequent next wheel of entrepreneurship is lost for Europe. That European companies stay European for longer, so to say. And out of this program, we're writing checks between 100 and 400 million per fund to basically facilitate establishment of venture capital funds of target size of 1 billion. So that's actually one of the kind of not landmark, but target criteria. There are probably a few more. Juho, Nordics, I think there are some national initiatives. Are there some regional ones? I'm not fully sure. I think you're muted. Now we hear you.
Like you okay. So yeah, as you rightly alluded to, the European Tech Champions Initiative, particularly with smaller countries like Finland or Sweden or Denmark or the Baltics, the question is always, if I participate in this initiative, what's my payout? So for bigger member states like Germany and France, it's kind of a bit more obvious. And of course, yeah, as mentioned, there are national interests that these institutions are pursuing, and sometimes I guess what would need to be adopted is kind of the kind of midterm perspective and the potential positive spillover effects from these investments rather than direct short-term gains. But in the Nordics, we currently don't have any actively investing regional mandates. As mentioned in the strategy presentation, we have set up 2 business angel co-investment programs for Denmark and Finland. The positives from these national programs have been very positive, and then we had the Swedish Venture Initiative supporting the Swedish seed markets back in 2017 that we have now closed for new investments.
But Margus, to your point, I think what are the challenges? It is, as already mentioned, the governments kind of look for local gains and probably more like short-term gains, but one should always remember, and I think that's the message that repeatedly needs to be conveyed to the governments, that venture capital is not a local game. It's at minimum regional, probably at best it's an international game. So you should not be thinking of setting up initiatives, first of all, that are bound to very narrow national or as a neighboring country boundaries in terms of what they expect the fund's investment strategy to be. And second, the government should understand that by actually facilitating and creating teams and funds that are able to invest internationally and hence generate better returns overall, they're establishing a more sustainable venture and private equity ecosystem, because sustainability at the end of the day depends on the returns that the fund managers are able to deliver.
Good. We need to wrap up soon. Do we have any questions on Slido as well? Maybe we could pick one. Which one shall we take? Do you see us going back to ugly duck period returns? Referring probably returns are dropping a bit. And do we want to be back in ugly duck?
Personally, I don't think so, because as said, the returns that I showed today on the slide, these are returns as of mid this year, sort of data that already incorporates the market correction of the last 12 to 18 months. There might be some further down corrections, but if I compare the same chart that I showed, I think in Pärnu, and then maybe showed in some other presentations of with data 6 or 9 months older, the drop in net IRR sort of quartiles it's not like they drop from 20 to 10. It's maybe 1 or 2 percentage point drops. So at least currently the data that doesn't show. Obviously, it's a game of, at the end of the day, it's cash on cash that matters, not the paper valuations. But VC is a mid to long-term game. So no.
And maybe as well your opinion on platforms which allow retail investors to invest in VC and private equity funds. When you see these type of co-investors joining your investment in parallel, what's your take on it?
Juho, I think that's your cup of tea.
Co-investments with, sorry, I didn't see the question.
Retail platform investors.
Something we've seen to a limited extent, to be honest. I think family offices has definitely been one of the more up-and-coming investor classes across Europe. Also in the Nordics, we've seen them activating substantially in the last 5 years. Of course, there's a lot of potential in mobilizing retail investor capital for European VC, but so far we haven't. I'm not sure if the bigger bottleneck is regulation, that there isn't a proper structure and regulatory framework to allow for that, but we haven't really seen that to a bigger extent.
I mean, my sort of 50 cents on this one, I would be careful of encouraging that, because it's a long-term and it's so quite unpredictable game, and I think people who are kind of short-term minded and don't fully understand what they're signing up to, I mean, later you can get a lot of backlash, I don't know, bad publicity around it as well. So
exactly. Good. Thank you very much for very good data, very good overview, reason to be here, and then keep investing. So thank you so much.
Thanks.
And next, we have panel coming up with funds who have raised lately and who are fundraising, which would be the latest from the fundraising market. So please, the panel members, join me on the stage. In the order of photos, actually. First of all, I must say it feels slightly awkward, all male panel. Not sure when it was last time I participated, maybe let's call it retro or something. I don't know what's appropriate. We tried, but apparently quite several of your female colleagues were busy fundraising, so you are here. We start with the fact that Shinichi has flight to London going, and it will be a bit quick interview with you first, prioritizing you first because you have to leave a bit earlier, but then going through the stories still one-on-one. And we want to understand what is the current fundraising environment for you. You have been successfully able to close new funds, fundraising still, and you all have special angle to it. Either it's Japanese corporate funding, Japanese financial investors, either it's Baltic pension funds stepping up, either it's more government-related funding, for example, or high net worth individuals. So we discuss these groups and how you've been able successfully to fundraise. So first of all, Nordic Ninja, Shinichi, should we all go to raise from Japan?
Not all, but almost, yeah. Maybe 80% plus minus, I'll say. But yeah, yes, I'm Shin, managing partner of Nordic Ninja. So we recently, in September, just launched a 200 million fund, focusing on Series A, plus minus, and raising quite many capital from Japan. So we are also cornerstone investor is actually the Japanese governmental bank, JBIC, but we raised more than 10 different industrial blue chip companies, manufacturing, automation, even automotive, cosmetics, medical devices, and energy, etc. So they are all interested in the Nordic-Baltics and the Northern European region as like an LP investor. So the first thing is, of course, the greatest return as an LP, but on top, they are much, much more interested in what's going on, especially under the current circumstances, energy transition and sustainability trend, especially in the Northern Europe, and that's why they're interested, or we succeeded in attracting capital.
So when you look at the Japanese LP base, first of your fund was only Japanese. Yep. Second one, you have tried to raise from Europe too.
Yep.
What differences do you see?
It's a very good question. And actually, so for the Europe, for the Japanese, we try to raise the Japanese from Japanese. It's more like a strategic investor, we call, because they are also interested on top of the financial return. They are interested in the business collaborations, like open innovation opportunities. But for the Europe, we are tapping more like institutional investors, so they are pursuing the return. So the idea was like, yes, we started for the Fund 1, 2019, we started 100% from the Japanese capital. We are the kind of largest Japanese VC, although we had, the team-wise, we are Estonian partners, Nordic partners, so in a sense, we're Baltic, Nordic, Japanese kind of team. We are recently included some people from London. But yeah, in a sense, so by our intention, we are raising the different profiles of LPs in Europe and Japan. So, but still, I think that I would say the institutional investors in Europe are still a bit more sophisticated, professional, to be honest, because of Japan. The large institutional investors, they can do like a PE investment overseas, but for them, the VC investment abroad is still kind of the not new policy. Actually, they tried once, like 10 years ago, 20 years ago, but they failed. So now they are thinking it about again. So then now it is a good momentum. Actually, the Japanese government is pushing to open up the Japanese ecosystem, not only for the startup founders, VCs, but also try to invite more like international LPs, well, actually pushing the Japanese fund managers to go global.
So working with Japanese corporate VCs, what's the difference? How much different is it for you versus working purely with financial LPs? Are the interests aligned? Is it more work, less work? How do you see it?
It is still kind of in the process of we are educating that how the financial return is very much important, even for the corporate VCs, to be like a financially sustainable. Yes, there's still some corporate venture, to be honest, in Japan that they even clearly say to the market that we are not taking care of like financial returns because this is a strategic initiative. But some of the CVCs actually are really realizing they have to be continuous activities to contribute to the corporate, and they have to be also financially sustainable. So that means some like corporate VCs are really understanding that the financial returns should be the first priority. Then they can achieve the strategic returns they want.
How do you see Nordic Ninja developing further? Do you see more European LP base building up, maybe US as well, more diversified, or in your DNA, the core is still Japanese-related LP activity?
It is also, we are discussing a lot internally, but still, as our name says, we wanted to be like truly international. We already started Fund 1, the mandate was Nordic-Baltics International, so we are now covering Northern Europe. But still, in a sense, we'd like to have like more international LPs as our activity does. But the balance, we haven't decided yet.
Well, what would be your recommendation for the fund managers, for policymakers, and on potentially building relationship with Japan, attracting more investments? Does it make sense? What would be the right way? Is there a wider platform, for example, for it?
So actually, yeah, this is really becoming my interview, which we feel awkward. But yeah, yes, if I compare the Nordic and Baltics, maybe not for the investment side, if you see like ecosystem players, the Nordics has more like a kind of a united activities like a Nordic Innovation Hub, like a Nordic Venture Alliance, like a NAVA. So in comparison with the Baltics, maybe still Baltics countries are still trying to find the approach, a way to unite as a Baltic or even Nordic-Baltic all together to sell this ecosystem together. Because if you even though considering let's say Nordic-Baltics all together, the size-wise, population, economy size is similar to Greater Tokyo. So, but in a sense, uniting all together does, at least for me, that makes sense, and it's all the easier to explain to the Japanese. Hey, we have an ecosystem here, which the size-wise it's similar to the Greater Tokyo. Of course, the actual area is much wider, but actually number of unicorns, if you count here, it is more than 10x more than the Tokyo greater area. Tokyo still maybe 5-ish, depending on how we count, but here you have more successful cases globally. And Japanese unicorns are still quite domestic, to be honest, unfortunately. Yeah. So you have successful cases, but that has to be more marketed maybe in a better way together.
So as a region, we have story to tell. Yep. It is big enough. Separately alone, yep. It is just so much more difficult.
Yep, I think so. Maybe Skype, Wise, or like Spotify. You have a lot of household name already. Like not only the ecosystem people knows, but or even the normal people can understand. Like Volt from Finland, but Volt is quite active in Japan, by the way. So. But yeah, yes, maybe it could be more. You have a more continuous communication to the Japanese market. On top of that, there's already existing some good image about Nordic Baltics from Japan. But I think you can do more.
Mm-hmm. And it probably would apply to other regions and other larger LPs as well, to be explained as one region and one market in a sense, and to be more attractive. So thank you. I know you might have Formula 1 driver outside who will take you safely to airport now. Yep. So thank you very much for your inputs.
Okay, thank you. Thank you.
Kintas, heading next to you. So you have seen quite closely now, very locally, how the LP base has been built up, how the pension funds have been developed over the last few years and so on. So what has been your fundraising experience? You lately announced a new fund.
Yeah, I'm just going to give a bit of a background, maybe really quick. Practica Capital is a venture firm, Pan-Baltic firm. We are finalizing raising our, let's say, fourth fund, but third generation fund. Talking about the size of the fund, we were planning to have 70 million, hoping to get 60, but probably going to end up hitting the hard cap, just being above the plan. And about the journey itself, I think it's matches all the criteria of fundraising, because it was very hard. It took a big toll on the whole team, naturally. Just as they say, in VC firm, fundraising is one of the hardest things we get to do. So we really experienced that. Then it comes to time. It's also a bit of a textbook case. It was from 1.5 years to 2 years to reach the final closing. The amount, as I mentioned, was a little bit above expectations. Now, talking about our investor base, probably I'm not going to provide the list of all of our investors. Just going to say that we're really thankful to all of them. And we will have a special occasion early next year for this announcement and to recognize all of our investors. Just to say that 60% of investors, around 60% are institutional and high net worth individuals, which is I think, a fantastic achievement. Talking about this, how we came towards this and how we approached all this and why it could happen, I would say because of great performance through our second generation fund, because some changes in a team took place that are still taking. We have some great hires in Estonia and Lithuania. Also, I believe that the direct contact, the planned contact that took for 4 or 5 years with investors we wanted to see in the fund actually gave results. Some of them 5 years ago said that's definitely not possible, never gonna even look at venture capital. And they now are investing in a fund. So I think this is a bit of the background story of how it all went. It's not all roses, but here we are, pretty happy with the final result.
Did you try to raise outside of Baltics as well? How much did you go to international for LPs?
Not gonna lie, we tried a little bit, but I think our efforts were not directed there. Just because I think internally, when we plan these things, we sort of expect success from certain sources, from the fund-wise, and going to United States or working on the funds from UK seemed like a very far shot. That we just, as a small team, don't have enough resources to go and do that. We could do that through associations, starting very early. That's have a good that would be great. So we could do that, and I think the next fund, with the changes, the bigger fund gives us options to work on that starting next year, fundraising slowly, making contacts, etc. With this new way we're going to do it. So I would say not that much of outreach to the very wide international public of investors.
You mentioned significant part of the LPs are institutional. How many did their first investment? How many were already quite experienced, knowing what they're looking for? So how have you seen the LP base maturing in their decision making?
They are maturing. We are really happy to see that in our previous fund, we had one of the pension funds from the Baltics investing in a venture capital, I think for almost the first time. Now we feel much more confident. We feel that they know we're investing to, they know the team. So it took a while to sort of get used to each other, and I think that makes sense with all the investors. Now we're seeing another Baltic pension fund coming in on a similar terms, just saying, okay, we're gonna check you out and see and learn together with you and build the portfolio, and then the next fund we hope we're gonna do the same, double down or quadruple or tenfold down on their investment. And then we'll take it from there.
Thanks. Moving on, Mikko, so you're raising, is it fair to say, first-time fund?
Indeed, first-time.
Even there has been experience, and sometimes it sounds unfair.
Indeed. I mean, it's an uphill battle, as everyone knows. The stigma of first-time team, first-time fund, that's something that everyone's trying to get rid of as soon as possible. We're still in process, but I think we've made some pretty nice strides and decent progress. I actually checked the calendar. We had the first external fundraising meeting back in November 25th last year, so it's been technically a little less than a year. Since then, we've managed to onboard more than 70 investors, 70. I think in Latvia, we're by far the largest manager in terms of number of LPs. Now, the ticket size of an average LP is a different matter. We have
refer to pension funds, for example.
No, I mean, we do have one pension fund. We do have one insurance company that we've managed to onboard. So in that sense, we're starting to make some progress on the institutional side. But given this, given the reality of being the first-time team, first-time manager, we've chosen very naturally, I would suggest, the path of least resistance, and we've just been hustling. We've been calling up, friends and family and acquaintances, people we've been doing business with in the past, people we've helped make some money in the past, and we've been pitching constantly, and that's the result so far across 3 strategies that we run. But primarily sustainable energy, we've, as I said, managed to convince a little more than 70 investors and raise a little less than 40 million euros.
Mm-hmm. How much for high net worth individuals, additionally to the fact that they know you, they like you, and so on, the investment thesis and your focus area, the phase matters. So how do you see this as playing the bigger part as a messaging to high net worth individuals?
It does matter, obviously. I mean, I can't say that it's just our nice faces or trustworthy handshakes or whatever that might be. The strategy that we've chosen, the sustainable energy or renewable renewable energy. That is, I think, also as suggested by KPMG colleagues, one of go-to strategies these days across Europe. We're not unique in that sense. What is helping us a little bit is that Latvia, I mean, well, unfortunately for us, to some extent, fortunately for the potential opportunities, you saw that Latvia was lagging behind on lots of indicators. Again, in the tables that KPMG guys were showing, the same is truth for the renewable energy. If you discount the Soviet legacy of hydro plants on Daugava River, we're lagging behind Estonia and Lithuania probably 5 to 7 years in terms of just very basic, solar and wind power, and that was something that we've been pitching non-stop to our investors, and that is something that is, as I said, resonating reasonably well. Now, what is also helping is that by alternative fund standards, our fund's intended life cycle is fairly short. It is a 5-year fund, and if stars align reasonably well, we actually plan to sell the portfolio even faster than that. So that's also helpful. But theme, answering your question, definitely a very important element.
And it looks like you have a very strong message for Latvians where you are lagging behind, you want to fix it, and there is also a, initiative, incentive, and willingness to support you on that mission.
That is part of the selling point, indeed. I mean, we're kind of looking at the best, if you will. We've tried to understand the sort of sales pitch that LHV, the successful Estonian bank, has had. This national champion. We've looked at some of the Lithuanian managers that have also been very successful with that sort of messaging. And this is something that is resonating reasonably well with the local business community. And from those 70 investors, I think so far 3 or 4 are non-Latvians, and actually one of those has a Latvian wife. So I guess 2.5.
Naturalized.
Yes.
Good. Thanks, Jussi. It looks like you have raised quite a lot from public sector investors, at least by number of investors you have on board, and then usually most of us have 1 or 2. You might have 3 or 4 that you have successfully engaged. Public sector investors versus private.
Yeah, thank you. Good question, and nice to be here back in Estonia. So maybe just a little bit of background. So Voma Ventures, we closed our 3rd fund this spring, and the first closing was 91 million. We're still continuing the fundraise. And obviously our heritage and the focus is in deep tech. Our 2nd fund was sort of defining the strategy, and we were able to sort of prove that the strategy we've selected is working, and now with the 3rd fund, which is 2 times bigger than the third fund is 2 times bigger than the 2nd fund, we are then sort of expanding the strategy towards the other Nordic countries and Baltics as well. And to your question, so our anchor investors include EIF, TESI, and then we have some invest from Sweden, and also VTT, who was another, on top of EIF, another anchor in our 2nd fund, continues to support us in the 3rd fund with a smaller ticket. But they are sort of all coming, at least partially, from the public sector. But obviously then the fund rules are such that we need to have at least 50% of private capital. So in terms of the number of investors, then obviously there's much more, a bit like you, not 70, but still much more in terms of the number investors coming out of the private sector. Then I think sort of I think it's maybe colleagues here can sort of validate the claim, but I think it's very much also about the differentiation against the other players. And for us, obviously, the deep tech is one of the main themes. But then also the geographical foothold. So We try to be sort of a pan-Nordic Baltic fund, so there are quite a few funds in Finland which are much more clearly sort of Finland-centric than what we are. Then also the team building is based on that, so we have team in Helsinki and then a smaller one in Stockholm, but planning to expand that. So that's another, and then of course the stages and all of that we are early stage fund and maybe the fourth thing which is very important to us is the impact angle. So we are Article 8 impact fund, and then of course all of these all LPs have different kinds of strategies, and they have different allocations for impact, for deep tech, for digital, and so on and so forth. So that's our way to approach the LPs and also maybe differentiate from some other VCs.
How have you seen public sector investors developing? So most often, you know, in early days they have their special requirements, so much investment back to the country and so on. So and over years there's been like gently more and more flexibility. So is it your experience as well? How do you see the public sector investor requirements changing over time?
Well, obviously, we're still also considering ourselves as an emerging manager. So Voima Ventures was established 2019. So our sort of line of sight isn't that long in the history. But I would say at least from our experiences with the public sector players have been very positive, both with EIF, with TESI and others. So very sort of supportive, very much helping us to fundraise with other parties, making intros and all of that. So and of course, as they have very sort of extensive portfolios of VCs, there are quite standard practices. What are the do's and what are the don'ts, and they have a lot of experiences from the processes. So I think we were very happy with the process we had. Obviously, the environment as such is quite challenging. So getting the first closing beyond our own expectations was very positive surprise, and obviously required a lot of work. But still, I think that also helped the process as such with the sort of public players to get everything sort of done in time.
Yeah. So all of you have very good feedback currently from the market. Like, you know, some LPs might say, I'm over allocated already. Some might say, I don't have liquidity. Liquidity, you know, becomes more and more issue. Some have said, you know, previous portfolio have not produced enough exits and so on. What is your prediction also for the upcoming panel? For policymakers, what is your prediction of the market, how it develops over the next 3 to 5 years? What are we going to see? Just as an intro, lately talked to one fund manager who closed his fund maybe 2 months ago. He said, you know, 50% of the funds will not exist in 3 years' time. Looking what kind of type of feedback he got from the LP base. So what is your prediction for the market? How the fundraising market will develop in coming years?
I can take this from first. I guess it really depends. The fundraising market really depends on the ecosystem itself. Like, how will our portfolio companies perform? That's definitely, if we are going into like 3rd, 4th generation funds, our performance from our 2012 fund will be quite essential fundraising the next fund, and we know that. Now, what's important for the whole ecosystem to be able to fundraise further is for Lithuania to have its first very serious big exit, like an IPO, something on the WISE level or even bigger. For example, Vinted on Art Security could definitely do that. There's even talks about it. If they do that, that will strengthen the whole base of ecosystem, providing a lot of mid-C-level employees of that company, the finance, where they can deploy into venture capital funds, early stage, later stage. So we do believe that this could be one of the events that's crucial for further development of ecosystem. And in that ecosystem, I'm sure currently in Lithuania, more than 58% of the fund managers will survive, just from what we see. There's in venture capital 5 or 6 of those, so I believe there's enough space for 3, 4, or even 5 or 6, what we have now. They all can survive further.
Mikus, your forecast?
Yeah, well, we're new kids on the block, so very difficult to kind of compare things, and unfortunately can't look back at the good old days of
the first one, right?
Exactly, good old days of 2019 and 2020, but sort of very much echoed the suggestion that sort of performance is going to be the key. I mean, on a literally micro level, we're seeing that even now. Sort of we did the first round of with institutional investors in relation to our sustainable energy fund back in very beginning of this year. At that time, most of the people were obviously super skeptical about what we were suggesting in terms of our strategy, in terms of our sort of intended speed of execution and other things. Some of them believed in us. Now, a month ago or so, we did a round with more or less the same set of people, sort of introducing them to our second strategy, to the self-storage strategy, and obviously we're kicking off meetings by suggesting that, hey guys, what we were telling you and promising to you and to all the other people that we talked to at the beginning of the year, so far we've actually delivered on everything and then some. Obviously that hasn't resulted in super nice net IRRs yet. We're in very early stages, but at least so far we've kind of done what we've promised, and that helped to make those early and intro discussions in relation to the second fund way more friendly and to some extent sort of easier. So our hypothesis very much is the same, that as long as you perform, you should probably be doing well, or at least reasonably well, even in super difficult markets. Now, if you don't perform, then yes, sort of once the how did I say, once the tide clears out, then you see who doesn't have pants on, right?
So and the performance is super tricky. Less funding available for companies. Exit market is quite down. So, and at the same time, performance will define our next funds. So you see, how do you see your next fund? Even you are raising now, then what's for your next fund?
Yeah, maybe still for the previous question, if I may. Yes. I think it's obviously the overall sort of how vivid the market is in this region is very much sort of dependent on several layers. And the ecosystem itself, we need to have interesting companies who are growing regardless of who are funding those. We need to have interesting exits and all of that in order to have sort of international attendance to this part of the world. Then of course from the sort of VC perspective, I think maybe Sweden is a bit of an exception. There you have very big funds, you have very sort of global teams, but I would say that to be sort of maybe a bit polarized, but still I would say in other countries the teams tend to be still quite local. And my sort of prediction is that the teams in other countries are also getting more sort of international and less local. And that would also help then sort of building larger funds. The average fund size in Finland, and I would claim that in other countries, excluding Sweden, is still sort of maybe around 100 million or even below that. Mm-hmm. And for us, obviously, well, now it's about sort of walking the talk as we have a new fund and hopefully, and our second fund is now fully invested in terms of the portfolio and looking forward to making some good successes from there and making an interesting portfolio from the third fund. But our plan is to be all the time more sort of Nordic, more Baltic, and being sort of the new Nordic-based player, being a sort of household name in the sector we are active, being the deep tech, being the impact investing. Hopefully the next one will again be larger than this one, and we can make a sort of more significant difference in the market.
Mm-hmm. So we have 3 minutes left for dreaming, how the future could look like. What is your thinking? What is your input for the next panel? How the market should develop? What kind of instruments? What kind of LP types do we need more? What should be done for it? I think Shinichi had a very strong message. let's collaborate, let's market this region as one, and you might have Japanese market much more easily available, and obviously it can be applied to many other regions as well. So what do you look for? What do you want, how the market should be developing in coming years?
I think one of the things is continue doing what we're doing. I think that sounds simple, but it takes a while to get an effect. Making great events in the Baltics where we invite investors naturally. Second is keep PRing our ecosystem, going to the United States, telling that it's a great place here, bringing investors and showing here around, LPs also, not just co-investors. Creating great companies that become the brand names of the ecosystem. And second thing, as I mentioned, is having IPOs. That would be a big deal for investors to come here and see our ecosystem. And final but not least, what we were talking, and I was talking in TechChill about, is this pushing this new Nordics idea, trying to have it like at least Baltics for the start. To have it as one market as one place. If we are inviting LPs to come here, we invite not just to Lithuania because it's not worth a while, we invite them to come see Estonia, Lithuania, Latvia, to see these countries as one. I think these are like biggest blocks that, at least from Lithuanian association perspective, we are planning to push forward to increase LPs inflow. So in the next fund, we could have at least 2 or 3 institutional LPs from, not from this region, not from Nordics, but from other United States, preferably probably UK, Germany, whatever.
Very much agree. I mean, we are actually, I was about to sort of compliment Jussi on New Nordics term, but Gintas also used that. I mean, we are using that in some of our materials because literally, I mean, truth is, even though we do think that sun sort of revolves around us, I mean, we're just not on the maps of many people. So we have to put ourselves on those maps.
And I think, was it fundraising statistics on, so KPMG very nicely rounded 0.0 from Baltics up to 0.1.
For next meeting.
So
yes. Magnifying glass is helpful from time to time.
Exactly. That was very helpful. Jussi, how the market should be developed from here to have more resilience in difficult times and more potential?
Well, I think there are again sort of several layers to it, and first of all, I think among these times people tend to appreciate like stability and predictability, and that's something that we should really sort of keep our focus on. It's also about sort of attracting the best talent in the region. So that's the way how you are able to build the companies, how you are able to have the critical mass of talent in locally available, and of course it's then it's sort of keep on grinding. It's hard work.
Exactly. We have one question in Slido that exactly relates to talent, what you mentioned. So how do you feel current level of tech talent in the Nordic and Baltic region? And where do you see the greatest gaps in next 2 to 3 years, as your focus is deep tech? So how do you see the talent and maybe on the deep tech end as well?
Well, yeah, of course, sort of the new Nordics region is I think globally appreciated from very high quality universities, and then we have people who are very sort of skilled in different areas. Of course, deep tech is a very wide term, so there are certainly sort of maybe hubs where you have the critical talent available, but then there are also, of course, a lot of deficits. So and definitely we need to have also more international teams in the startups. So that's something that we really should improve.
Good. We are a bit over time. Thank you so much.
Thank you.
Thank you for the messages and your thoughts on how to take the market further on. And so we give the word next to the panel who will try to define how to solve it all. And meanwhile, enjoy coffee and sandwiches as well if you like.
Join me on the stage. Yeah, just. Okay, big task. So as Marcus said, do take a cup of coffee and while we get seated. So now it will be the big and scary state investors on the stage. Some on the stage, the ones closer to Tallinn, so the Estonians and the Finns, and then we'll be also joined online by our dear colleagues from Norway, so Johan Björkevold from Investinor and Ole Hauskov from Exported Investment Fund of Denmark, and then of course our lovely Sille from SmartCap here in Tallinn. And for those who joined later from the beginning, so I'm Mattias Kaila from TESI, the state PE and VC arm in Finland, and the host for this panel. So, are we getting Ole and Johan on the line? Yes. Super.
Yes, I'm here too.
Good. And if possible, can we get them on the panel as well? Excellent. So we don't need to be twisting our necks on this one. Excellent. So let's get started. For the benefit of the audience, if we could, have a very short, quick intros, personal intros, and the short introductions to your organizations and your mandates. So, if please, Sille, if you could start.
Yes, I'm Sille from SmartCap. SmartCap is Estonian state-owned venture capital fund. Currently, our assets under management are close to 300 million euros, and we have two pockets that we make investments out of. One is green fund, investing only into green technologies, either directly or through VC funds, and then we have a generalist VC fund pocket where we invest into local, no more regional VC funds to basically contribute to the VC capital market development here in the region.
Okay, thank you.
Yeah, I don't know if you want a personal quick intro as well. Yeah, but I think we're fine with that.
Yeah, I think we should
I've been around for a while, since 2007.
Seasoned investors around. Yeah, okay, then Johan, please go ahead.
Yes, hi. Matthias, you mentioned big and scary. I am 2 meters tall, but not scary. So my name is Johan Björkevold. I work for Investinor, which is a governmental VC fund. We have both a direct investment arm that was created in 2009 of around 400 euros. I've been working as an LP since 2005, and in our new free generalist fund-of-fund mandate, which I co-head, we've done 25 fund investments the last 3 years. And we do have a mandate outside of Norway, but we need to see enough of a Norwegian nexus and appetite for us to do so.
Thank you, Johan. And then over to Ole.
Yeah, thanks a lot. Thank you for inviting me here, and sorry I'm not able to be present in person. Just sort of technical issues. I could not hear what Johan said, so if that could be solved, that would be helpful. But I'm Ole. I work with IFO, a merger between EKF and Vækstfonden. We do both direct investments, but also fund investments, obviously. And we do fund investments both on Vækstfonden's IFO's own balance sheet and also through our fund-of-fund DVK, which is Danish Growth Capital, where we have external investors invited. We have approximately 3 billion euros under management, so approximately 55 investments, fund investments, both buyout and VC in our fund of funds, and 60-70 investments on our own balance sheet. And currently, our mandate is investing into sustainability, green transition, deep tech, security, defense, commercialization, and obviously also growth capital, since 7 out of 12 unicorns in Denmark actually left Denmark since 2000. So we want to have them staying on board in Denmark.
Thank you. So at Tesi, we have been at recent years since the market has been graduating, maturing, and so on. We see a lot of underlying companies of the funds getting bigger and bigger with the need of larger financing rounds. So we have been ramping up our operations. And also, what also you say in the previous panel alluded to, a lot of GPs, especially in the VC space, they are internationalizing. So we have been, from I would say national perspective, stretching our mandates. So we have been increasing the share of the investments we can do in terms of more international strategies, and also then anchoring as well strategies outside Finland as well. In the current environment, or taking the longer term development as well as on the current, more severe changes in the fundraising markets, are there anything that you would like to point out in your operations that you've been changing to support the market development and also weather the changes? Would you like to start on that one?
Myself, Ole?
Yes.
Oh. Yeah. So thanks a lot, Matthias. I mean, we have, as mentioned, been merging with EKF and obviously have had sort of a strategic workshop on what to focus on going forward. So our focus going forward is sort of which has not changed from the last couple of years, where other corporate investors does not invest, and where Denmark wants to grow going forward, and that's sort of in sustainability, green transition. We want to focus on deep tech, security and defense, and also into commercialization of research. That's areas where we have not been very strong in Denmark. And secondly, as mentioned, growth capital is something which we really want to make available by investing in funds, but also try to see whether we can create something in Denmark, in the Nordics, a significant growth fund. So therefore, together with the merger, we have actually had a mandate of 350 million euros to invest into growth capital, both direct and indirectly. So that's a strong initiative going forward.
Thank you. Johan, Sile, anything to add?
Yeah, from our perspective, it might be surprising to some, but not a reality for us locally, is that the Norwegian VC ecosystem hasn't really come to the level of Finland, Sweden, Denmark. In a robust portfolio. So our thought process is that if we may build a good foundation of fund managers that weren't there, many of them that weren't there a decade ago and even 7 years ago, we can build the ecosystem through, unfortunately, not big enough ticket sizes, but at least some of them will, and hopefully most of them will produce adequate returns, so we will have more funding available for them going forward. We have an appetite for both first-time GPs and emerging managers, and we don't look much into the mid-cap buyout segment.
Thank you.
In Estonia, I think the biggest news for us have been that we actually adopted the Nordic investment model, which means open doors policy. So far, we have only been doing running the competitive process. So we put the LP ticket on the market, and then we line up all the GPs who are interested in it, whether it fits for them or whether the timing is perfect for them. But if they want it, they have to line up. So now we have changed the investment process to open doors policy, and all the GPs can approach us when it's the right time for them and propose a strategy that fits them the best. So I think this is the biggest change. But strategy-wise, we have been investing a lot in pre-seed and seed stage funds, and now we have to look what is going on the market at a high level, and it was mentioned before as well. I think that there is a funding gap or lack of capital in a bit later stage around Series A, Series A plus. So this could be the one of the strategic focus areas for us in near future.
Thank you. What I'm hearing is that in each and every country there's a very strong support for the local ecosystem from the state players, and increasingly also in a regional level, shedding some light for the difficult market environment. But I think the reality for all of us is still that we're still seeing a lot of fundraisers, especially below the 100 million mark, that there is a lot of variance on the success of the GPs to fundraise. In the current market environment, which of the LP groups do you see being the most active, and perhaps have you seen changes in the behavior of some of the LP groups in the past couple of years?
So the market dynamics in terms of LPs or the profiles.
Yep.
Yes, I think it's. There are many reasons behind the changes that we see in Estonia. One is the regulatory change for pension funds, but there are many other reasons as well behind the dynamics, and we see that pension funds are rather becoming more passive or decreasing their exposure, definitely not increasing their exposure. So yes, one is the regulatory change that took place here, but also the denominator effect when the markets go down and the illiquid part keeps its value, so the share of all the private equity and venture capital investments increases proportionally. And there are not that many distributions during current market conditions, so this is on top of all the other changes. This is having effect that the private equity and VC money is not being returned as expected, which doesn't release the money for new investments. So yes, rather passive role and decreasing role of pension funds and increasing role of family offices, especially. I'm not talking about just VC, but also private equity, but especially in VC funds. The new generation of entrepreneurs, business angels who have either sold their traditional business in recent years or who have established a successful startup company, those investors with that kind of profile are being more active and dominating the LP base in Estonia, I would say.
Then over to you, Ole, because you are probably most widely invested in the market out of the four of us, both in terms of the size of the funds as well as then the strategies of the funds from VC, growth to buyout. Any reflections on the dynamics in the different size groups or the strategies that you see in terms of the LP behavior and appetite?
Well, I'm fully in line with what Sille is saying. I think denominator effect, lack of liquidity, DPI is something which is hitting a number of fundraisings. I think you will actually see funds under 100 million euros. It's also hard to invest in for pension funds, institutional investors, as their ticket sizes often are minimum 25 to 50 million euros. So to have them invest into a fund size of 100 million euros, that's not relevant for them because they want to have ownership stakes of, say, max 10% of the funds. So therefore, we see many more new family offices entering into the market, foundations entering into the market, and semi-institutional investors being more and more active, and much more important also for first-time funds, and also taking part in sort of democratizing the VC and PE industry. So much in line with Sille, but maybe also adding the fact that sort of smaller ticket sizes is hard for pension funds to invest in, since they get too large of an ownership. At least that's our view.
Anything to add, Johan?
Yeah, it's surprising to me to see the different LP lists from different funds of how little overlap there is. It seems like there's very few of these pension funds that are in a steady deployment state, par one that we know very well, KLP in Norway. But it seems to very much go back to that venture capital is a relationship business, and either local pension funds or a sector that adds to what the pension fund is looking for, is in my head surprising when you know the skill level and the robustness of different pension funds. That I don't want to throw under the bus anyone, but it's not that they're lacking capital. It's more that I feel they have a lack of manpower to build a active allocation strategy within the at least early stage venture capital asset class. I also very much piggyback on the lack of DPI. I came from a meeting today where a family office said, okay, your new fund, show me DPI from that fund and then get back to me at final close. And if you're able to do something, then we most likely will be a ticket writer. If not, yeah. So it's very, very vocal about providing returned capital so they can reallocate.
It's very interesting, with the DPI, because I think that's currently a hot topic in the market. What I'm hearing, some of the LPs saying that they don't trust the TVPI because it's been highly inflated in the past couple of years. So DPI is very much what people are focusing. A lot of pension plans in the Northern Europe being more kind of releasing the reserves rather than creating the reserves. And a lot of the family offices have started investing in the segment quite deeply, yet they are still lacking the distributions and then holding back on their allocations. It's very interesting, Johan, you mentioned about the LP list of different GPs, because that's also the observation we've seen in Finland, especially in the sub 100 million funds. So what you're seeing in those cases is the state investor, potentially EIF, and then one pension fund with kind of a smaller lookout ticket or kind of a one senior person, so you got the commitment from their type of investment, and then long tail end of investors. And we did the analysis, so it was I think in VC funds past 10 years in Finland. If you take the count of the investors, so 2/3 had done only one investment. For basically each and every GP, you before you get across the 100 million euro mark, it's like you're restarting your fundraise over and over again. So if we take it from here, and I guess seeing the nodding of your faces, I think we're sharing a bit of the same picture here. So if you look at the fundraisings you've been involved in your home country, to what extent do you see cross-border LP investment activity? I would say beyond the state investors, and let's start with the below 100 million. Do you see any activity below 100 million in terms of a cross-border LP investments? Maybe if you, Johan, start from the Norwegian perspective.
We do see some, but again, they're very much a relationship-based. We have some that are West Coast US. There are some that come from abroad. But in the below 100, it's very much the usual suspects of relationships and family offices and the ones that they've earned the trust from before. And it's a very difficult situation. You've actually, I wouldn't say depleted, but many of these family offices are over allocated towards that GP. And if they raise money again before producing returns, it's difficult. Above 100 million, it surprisingly seems easier. That's a harsh word to use, but it seems like then the appetite of AP-fonden from Sweden, of KfW, of the, in many ways, the ones that suddenly can and will have you on your radar, they, not likely, but they are ticket writers where we see them. So 2 funds that have been, one that just done final close, Hadian's fund, hit the target and then some. And Sandwater now is maybe hitting its hard cap.
Thanks, Johan. Ole?
Yeah.
Please, Ole.
Yeah, maybe to add to Johan, I think, I mean, many first-time funds sort of below 100 million euros also have local geographic strategies, and that's I guess from our point of view, it's hard to attract cross-border investors if you're only investing locally, maybe because of lack of knowledge of local markets. Lack of track in the local VC market because of lack of maturity, and therefore it's less attractive sort of to make cross-border investments for the family offices. And another point on family offices is that they lack resources also to look into the VC industry and the different funds. So therefore, I guess we always encourage. For the funds, not only to sort of go local, maybe in the first fund, it makes sense when defining the investment strategy, but when the investment strategy is proven, it makes sense to expand the geography, and that could open doors to new cross-border LPs. So that's one point. And second point would be that I guess fundraising never stops. Fundraising is also being made while your investment period. So try establish relationships during investment periods also, and also cross-border relationships because it's a long-term investment for sure.
I can maybe comment from my side. The magical hurdle often tends to be here around 75 million. So if, until you're 75, you're rather small and it is harder to fundraise. However, I see LPs in our region, for example, in the Baltics, pension funds are happy to write checks for funds that are below 75 million euros. So, the context matters here. So in our home region, smaller checks are completely okay. But if you want to go and fundraise from US, for example, it's a no-go. I mean, it's a rounding error for them. But Shin from Nordic Ninja actually gave quite a good insight how some corporates think globally. For example, Japanese corporates who have either strategic interest, they want to get access to the market, or some international investors who are willing to do smaller LP checks just because they're looking for some very specific edgy stuff. Yeah.
Yeah, makes sense. We as we're hearing, we are still seeing quite a little of the cross-border activity, but probably also, well, one being the maturity of the ecosystem. But since we are verging on the point that we should be able, in terms of fund sizes getting bigger, able to get to the point that the region should be able to attract more cross-border LP investments. So on top of that, are there any factors that you see enabling this capital to flow into the region, or potentially blocking these cross-border investments taking place? Ule, would you like to start on this one?
Yeah, I mean, for sure, I think, as I mentioned before, sort of local geography that would block cross-border investments. I think, at least if we from IFO point of view should look into a Swedish, Finnish or Baltic fund, there should be sort of a Danish angle to it. And actually, I think also if you would like to have sort of semi-institutional, or at least family office investors from Denmark, sort of a Danish angle would be important as well. I think for pension funds, institutional investors, it's not the same. It's track, which is the most important issue, and do you have and it's hard for pension funds, or at least Danish pension funds, institutional investors to look into first one, first two, because it's hard for them to see a demonstration of track record. And DPI, as we talked about before, and I guess that's something which we are still really aiming to give more knowledge to the institutional investors about, that track record on VC has become strong, and also have become sustainable for a longer period. And I saw Chris presenting a nice way of sort of a consistent return, which is something we need to keep on demonstrating for the VC industry, because that's the only way we sort of get institutional investors to invest as well.
Very good point, Ule. Thank you very much. So what could, as state investors, we could do, and we could do better in the future? Johan, would you like to start on this one?
Well, we're in Norway. We're very happy that we have TSE and IFO that have been trailblazers in creating a sustainable, large portfolio of fund investments over decades, and for us, having to demand side letters for funds investing outside of Norway is not something I like, but I have to deal with. So that both of you have been able to convince your owners that this is counterproductive is something that I'm working with. That said, many of the funds that we invest in have a Nordic, even pan-European appetite, some of them. So I think that one of the elements of the mandate that we're have as a straitjacket is that it needs to reflect the market conditions, and unfortunately the governmental stakeholders look at this as somewhat to only help ourselves. But the good thing is that the GPs are leading the way. They are being more targeted, better focused, and therefore looking at companies and other partners within the GP that are located elsewhere, and therefore getting a broader reach. And many funds that we have invested in have done exactly so, and found partners in Copenhagen or in Stockholm, and done it themselves, and then by that being more relevant to a broader LP base. As my mandate, I'm not allowed to be a lobbyist, so I can only say what I see in the market, and then I'm hopefully with hitting the nail often enough, eventually it goes in.
Thank you, Johan. Anything to add, Sille?
Yes, I fully agree that it's there are certain very distinct features of being a state-owned LP and trying to, fulfill the state's objectives, investment objectives, which is not just return, but they always have something extra. For example, return, but from your, country's companies. So it is rather limiting, and then you have to sort of balance between the different objectives and expectations, try to match it with private LPs' expectations and then figure out the right mandate or investment terms. So it is quite a hustle, I have to admit, and we are fully aware that very often when we have very predefined and limiting mandate, then it might become a hurdle to do cross-border fundraising. So I don't know how we're gonna, look in the future together to activate this cross-border LP activity, but definitely defining the geographical scope or mandate or redefining it could be one of the triggers to have a change here.
Yeah. Thanks. And also there was, Jussi in the previous panel also mentioned that there has been, joint investment as well. And I think, one thing to add is also ensuring that the state investors who see a lot of things, or almost all the things happening in the market, ensure that, that if there is, because there is still, strong investors, state investors in each and every country. So if there are fund strategies that fit into the natural mandates of the state investors, that we are sharing the deal flow, and also, if possible, sharing that with the local private LPs as well. With that, I think we could see if we have anything on Slido that is asked. There's one question about the current data about the LPs or fund of funds from Asia. That is actually a very interesting question. We did see quite a bit of activities, especially in Finland, but also across Europe, coming from China, both in the fund level, but also especially in the deep tech segment coming into directly into companies as well. A lot of that being also strategic capital as well. Less that in the past. We've seen more activity, at least in Finland, stakeholders reaching out from Singapore. We've seen a bit of a shift on the balance, towards Singapore in the Asian market as well. But less so still in the LP market, given the size of the funds that we see in the market. So the funds are not yet able to absorb the tickets coming from different continents. Any questions from the audience in the room? We still have a couple of minutes, so feel free to shout out anything in your mind, and we try to answer the questions.
Yeah, but they don't.
Okay, sure. Oh, well, question from a fellow LP investor from EIF. I'm just curious how you, as national sort of governmental agencies, are in future looking in terms of your capital allocation in terms of thematics versus kind of general support to generalist funds, and how much of that's going for climate, deep tech, life science, etc., etc. And let's say, should also GPs who are considering your investment factor that into their future sort of strategies that they plan to deploy and so forth?
If I start with just being through our strategy process, actually thinking through that topic, I think the future will be kind of a twofold. There's a lot of emphasis on the thematic funds, since we also see that that's the way to diversify the market, have more focused investors to support different companies in different sector domains. Our rough estimate for the next 5 years will be that thematic funds or kind of a loosely defined thematic funds which generalists which have stronger thematic focus areas will probably be roughly 50% of our fund volumes. But I would say roughly 50% will still go to the generalist funds, and I think that's also something that we will like to maintain the flexibility, because there's a lot of unknown factors in the future we cannot predict. Even though we're seeing now a lot of activity in deep tech, in green transition and different themes underneath, health and life science being big area. We see under deep tech we see dual use and defense tech up and rising. It's still, world can change quite quickly, especially when it's a question of innovation. So, and we see a lot of talent and a lot of expertise that's been accumulating also with the existing GPs who have their background on being more generalistic ones. So we don't want to also shake the market too much, saying that we are now shifting our volumes quickly to another end of the market, but rather try to ensure that we are consistently supporting the natural evolution of the ecosystem.
Yeah, we are already making thematic investments out of our green fund, where we invest into green technologies and green tech VC funds. But this thematic is quite an important topic to bring up, because the later stage the companies are, the more specific expertise and knowledge you need from investors. So I'm just, I'm struggling to imagine, for example, if a generalist VC fund could successfully make investments in a Series A biotech company, for example. So yes, there is definitely certain room for thematic funds, and I would even consider a NATO Innovation Fund investment very thematic, completely dual-use focused funds. So yeah, you need this expertise funds on the market.
Ole, Johan, anything to add?
Yes.
I don't sit with a crystal ball saying that the next wave will be artificial intelligence or deep tech, or I want a fund portfolio that reflects the market. And good GPs need to be clear that the knowledge and expertise wishes of potential brilliant startups isn't generalist. They need a added value from the partners they receive from a early stage venture capital fund to solve problems they have. And so in many ways, these different funds need to be specialists on certain areas. If that results in a thematic fund, that so be it. But in my head, it's the generalists doing everything. That type of VC fund is almost eradicated. I don't think many funds can straddle such a complex dynamics. But for myself and my co-head of the fund investments, we have a pragmatic approach that it's the market provides us with solid GPs wherever they find good enough deal flow and good enough traction from other LPs.
Could I add, Matti?
Sure.
Sure. What we see is that, we will invest into thematic funds going forward, and that has significantly increased its share of our VC investments. I guess it's also because the VC market in the Nordics and the Baltics have become much more mature. Therefore, you have room for thematic funds. You have many more startups to support. And the thematic funds are often cross-border and not only local geography. So I guess that would be one point. And then just, if I may, Matti, come back to your point before on how do we sort of work together cross-border. I think we all have a common responsibility to attract growth funds to the market. We want to build larger companies locally, and we need to build and have significant growth funds in size to be attracted to the Nordic and to the Baltic markets. Just as an example, there are only 27 rounds of capital fundraisings above 40 million euros since 2018 in Denmark. So there are not so much to pick and choose from. At the early stage. So I think that's a common responsibility we have across borders, and that we should support the growth funds going forward in the and that will be a Nordic approach for sure, and European as well.
Thank you very much, and to the panel. Many thanks for all of you participating. It's been very, very nice to discuss with you on this one, and you know, I hope this has shed some light on, you know, that at least the state investors are supporting the market, and at least all of us here can make the pledge that, you know, whatever the policymakers behind, you know, with their good intentions, we try to navigate it then you know, through the market with the mandates we have, and ensure that we are supporting and not messing the ecosystem. Thank you very much.
So thank you for the great discussions. It is time to start wrapping up the event. And I will now first give word to Margus and then to Matthias.
Thank you. So a lot of ideas, a lot of conclusions. I think from statistics, we noticed that Nordic-Baltic region has a number of criteria, number of indicators when we use our potential right, clearly performing above the Europe. There has been good discussion on fund of funds, and fund of funds bringing additional value to market, bringing new LPs to the market, like we have experienced, have activated a lot of new LP base. I think messaging that the marketing the region as one helps really us to bring us to the global scene and attract much more global capital, like Shin from Nordic Ninja made a good example. And then Matthias, from your panel as well, it was very evident that for cross-border, it is very much relationship-based from time to time. But if there was more data sharing, more understanding how to develop the new relationships, that would be very helpful. Obviously, it looks like DPI is the new DVPI going forward, very well understood. Now, other than discussion, is there any action too? And we have thought and brainstorms, and Matthias has been cornerstone of the idea, which has working title LP Masterclass. Once per quarter, LPs only, education, online. More details from you, Matthias.
Thanks. So we at TESI, we have a very strong passion on the not just, you know, putting the capital work on our side, but also ensuring that the private capital is put on the work as well. We've done quite a bit on you know, introing a lot of the LPs across border. We'll continue to do that and investing that going forward as well. But today I have a challenge for all of you to participate as well. all the associations as well as the members of the associations and whoever who would like to support the initiative. So as said, working title LP Masterclass. An idea about that is that since we definitely need more capital flowing across borders to ensure that we have larger funds going forward to support the good and great companies of the region. One of the key hurdles is that a lot of the typical LPs investing in the asset class or potentially investing in the asset class, they lack the visibility, they lack the potentially the knowledge to come over the hurdles that you need to get over in order to invest in the asset class. So this is something we have been drafting in order to get up to speed with that, so that we increase the visibility on the region, which is, you know, if one was saying that the Baltics is tiny in the world map, so is the Nordics as well. Each and every one of the countries is very small, and if we pull it together and work together and start increasing the visibility inside the region and also offering that potential in the LPs outside region, we can make it even better. So what could be the content of such quarterly calls, or even more intensive if we get it really up to speed and people contributing to the content of it. So, you know, it could be showcasing the industry numbers, going deeper and deeper on the data, who's who in the industry, who's been fundraising, and so on. Because what we also hearing from a lot of the private LPs, that one of the reasons they are not investing, because, you know, when they don't see all the deal flow, it's a kind of fear of missing out, since if they're being offered one opportunity, they might be missing another one because they cannot fit it into the allocation, and they actually hold back on investing at all. It could be, you know, LPs to LPs, you know, giving insights on how they're assessing the GPs, how they're building their allocation programs, and so on. It could be, you know, GPs or group of GPs giving their reflections on you know, what's the market sentiment. You know, it could be deep down on different verticals, whether it be deep tech, whether it be B2B SaaS, and could be legal and regulatory topics, you know, key issues on looking into LPAs when you know, investing in the funds and so on, and one could continue the list. So this is a challenge. We are already, you know, we have the wheels rolling, and the VCA is now working together. We are committed with our data and data capabilities to, you know, be one. You know, delivering the content to it, but asking for all of you to participate, because we cannot do it on ourselves.
Thank you. So to wrap up, I would like to first thank my co-hosts, Margus and Matthias. I would like to thank our speakers. It was really insightful. I think a really diverse view on the topic. I really loved that everybody actually has the feel of the need for cooperation across the region, which I am feeling from the Venture Capital Association side more and more. And now on the practical side, so we will end here, and then there's a little bubble waiting outside. And then after us, in 25 minutes, our newest member, Tenity, will start a small panel discussion about making Estonia the new Luxembourg of establishing funds. So our topic as well. And after that, they will continue the presentations of their second batch of fintech companies. And at 7 o'clock in the same area, there is dinner where we are also all invited. So please stay if you can. And thank you also for our audience online, on site. And we have a momentum, right?
Right.
Until next time.
Thank you. Thank you.